We are back again.
Yes, yeah.
Now we will be discussing mutual fund.
Okay.
So, you want to say something?
No.
Okay. So we'll be discussing mutual funds, and I'll straight go back to a PPT that I have prepared. So I'll share screen with you regarding that. So okay, I found that. I'll share the screen with you. This is okay. Okay, son, do you see my screen?
Yes, yeah.
Okay, so mutual funds. The definition mutual fund is nothing more than a collection of stocks and or bond. You can think of mutual fund as a company that brings together a group of people and invest their money in stocks, bonds, and other securities. Each investor owns shares which represent a portion of the holdings of the fund. Okay, I'll explain it in Hindi as well. Okay,
Okay.
there is one person, एक आदमी एक व्यक्ति है, उसने क्या करा, बहुत सारे लोगों को लाया. ओके कि आप मेरे को पैसा दे दो, पैसा दे दो, पैसा दे दो. That person keeps money with him. He keeps money. वो कहता है मैं तुम्हारे यहाँ पे पैसा इन्वेस्ट करूंगा. पैसा इन्वेस्ट करूंगा, किस में इन्वेस्ट करूंगा वो पहले ही बता देता है. मैं आपका ब्लू चिप में करूंगा, मैं आपका मिड कैप में करूंगा, मैं आपका गोल्ड में करूंगा, मैं आपका बॉन्ड्स में करूंगा, इसमें उसमें वो बता देता है. अब आप उसको पैसा क्यों दे रहे हो, उसको पैसा क्यों दे रहे हो? वी आर नॉट गिविंग टू रैंडम पर्सन. Mutual funds are regulated, mutual fund schemes are regulated by government. They are regulated by SEBI various rules. A mutual fund manager is well capitalized. So that mutual fund agency is AMC, Asset Management Company. That asset management company is backed up by a very large fund. So most AMCs, have you heard of terms like companies like HDFC AMC, ICICI AMC, Axis AMC? So these asset management companies are floated by large banks, well capitalized banks. So there's a lot of trust involved here, because we are giving our hard-earned money to somebody to manage it on our behalf. So we want to be very reliable. The other person need to be very reliable in terms of their ability to manage our money. At the same time, the security of principle that somebody may not siphon off our funds, may not run away with our mutual fund money that we have given them. So we need to be trust. We need to have trust in their abilities, as well as trust in the solvency of solvency and integrity of that person. So capability, solvency, integrity, everything has to be there. So mutual fund is an agency which invest on your behalf, manages funds on your behalf. Do you hear me fine? Because the rains are going heavy and there is a lot of lightning and all. You hear me well?
Perfect. Yeah.
How you make money on your mutual fund investments? Income is earned from dividend on stocks and interest on bonds. A mutual fund pays out nearly all of the income it receives over the year to fund owners on the name of distribution. If the fund sells securities that have increased in price, the fund has a capital gain. Most fund also passed on these gains to investors in a distribution. Okay, let's say I invest in XYZ stock. That XYZ stock is paying me a dividend of, let's say, 3% per annum. That 3% is again payable to mutual fund owners. A mutual fund owned in a particular stock which was bought at 1000 rupees, now the market value is 4000 rupees. Whatever that increase of 1000 to 4000, whatever that increase, when it is booked, that is part of your gain. If fund holdings increase in price but are not sold by the fund manager, the fund share increases in price, you can sell them your mutual fund share for a profit.
Your camera is stuck. 1 minute.
My camera stuck? Can't see me?
It's fine. It's fine right now. Yeah.
Okay, that was my internet connection was not stable, probably due to the lightning, etc. going on, because we are experiencing heavy rains. Now it's all right?
Yeah, it's good.
Okay, so previous study, I'll dwell upon these topics a bit in detail. So what are the advantage of mutual funds? Professional management. If you want to invest your money into different markets, into different equity markets, etc., you might not have the knowledge, but a mutual fund manager is a professional management which has the knowledge. Diversification. A mutual fund ensures that there is diversification in investment. A mutual fund investing in, let's say, blue chip stock, it will not be investing all its money into one or two stocks, because there are clear guidelines on how a mutual fund scheme is to be designed, how much money that they can invest in a particular individual stock, how much money that they can invest into a particular group, Like there are different groups like Adani Group or Reliance Group. So
Tata Group.
the Tata Group. So there are limitations on even investing in a group portfolio. So this is all to ensure the diversification, so that the mutual fund manager, even by mistake, is not putting all its eggs in one basket. Economies of scale. Economies of scales mean basically mutual fund managers managing, let's say, funds of 10,000, 50,000. So they can have access to various resources, information resources, etc., which a retail individual cannot have. So they that is economies of scale. Liquidity, simplicity. Mutual fund investment, it's easier to invest in mutual fund. Let's say you are trying to invest in some small cap fund. When you go to the small cap areas, you will find that many of the stocks that you have shortlisted for investment are not very liquid. But when you are going to invest in small cap mutual fund schemes, you can simply invest in that small cap mutual fund scheme. You need not worry about the liquidity of individual stock or individual constituents. That will be taken care of by the professional management of that mutual fund scheme. And investing in mutual fund is very simple. When taxes, when making decision about your money, fund manager don't consider your personal tax situation. So sometime when we invest, we always keep on thinking about when to sell, when to buy, because we are concerned about the short term capital gain, long term capital gain. But here the taxes are the tax the tax part become irrelevant. So uh, another disadvantage that mutual fund has it, that mutual fund has legal restrictions. As I told you, that they cannot diversify beyond a point. There are several
Yes.
restrictions. The amount of cash that they can keep, and they cannot dwell into F&O. They cannot hedge their positions, etc. Or even if they are allowed to hedge, there are several restrictions on it. So these restrictions actually many a times they work in favor of securing our funds. They are giving us security, but they are also limiting factor in the sense that they curtail the freedom of fund manager. Each fund has a predetermined investment objective tailored for fund assets, region of investment, and investment strategy. At the fundamental level, these are three varieties of fund: equity fund, fixed income fund, money market fund. Equity funds, fixed income fund. Equity basically investing in stocks and
Oh,
various kind of and related things. Fixed income, then bonds and various fixed deposits, debt instruments and all. Money market funds we discussed
yes.
earlier in the day.
Yeah.
They're like they would be investing in treasury bills
PT.
or commercial paper, etc. So depending on your requirements, you can buy units of these mutual funds. Global index fund, specialty fund, sector funds, regional. There can be n number of. Will come to that. Kindly read it for me, Gaurav.
Oh. Investing through ULIPs. All employees of Indian private banks are discouraging their prospects from buying fixed deposits and persuading them to go for it's by a ULIPs or ULIPs. How to?
Uh, Unit linked insurance plans. So we can
Okay,
pronounce them ULIPs. Mostly they called it ULIPs.
okay. Further, they claim that it's a 3-year investment with free insurance of amount and assured returns on endowment. Bank agents still keep singing about USPs of ULIPs as investment proposal. Next slide. ULIP is not an investment but an insurance plan coupled with a few market benefits. ULIP is a very focused instrument for a very specific need. It's not supposed to be treated as a high return alternative to bank FDs. In fact, it is not even an investment instrument. There are no assured returns in ULIPs. It is much riskier than the underlying investment, as even if the underlying investment give negative returns, the banks still deduce all administrative charges. Coupling up the above fact with the current showdown period, many investors' returns reached 100%, that is, their policy become null and void. Most of the ULIP premium paid in first 3 years is consumed in administrative costs like agent commissions, fund manager fees, insurance premiums, and other fixed costs. As the agent cannot receive any commission after this 3 years, they claim that ULIP is for fixed period of 3 years. Your ULIP is not suitable for you if you are in very early stages of your career and don't have many financial burdens. You already have a good insurance plan, either individual or through your employer. Your only need is good returns of your hard-earned money. You don't want to couple your investment to market risk. You have the time and understanding to invest in stock markets and make money. Your investment needs are less than 10 years. You have some huge and predictable expenses in the next 3 to 5 years. Investing in loans, peer-to-peer lending. Advantages: better returns, more control, fast and easy, no legal hassles, beyond tax net sometimes. Disadvantages: greater risk, less liquidity.
Peer-to-peer lending, like you are lending it to somebody relative or a friend or something like that,
Okay,
to a business associate, something like that.
person
So
to person.
you
Other
can invest
investment,
in debenture, deep discount bond, realty, gold and silver, metal, oil. We have discussed about it. So main point here about ULIPs was that when bankers see money in your deposit, they try to market you various unit link insurance plan scheme. They say buy it in name of gold, buy it in name of your daughter, buy it in name of your son, they for their higher education, this and that. But mostly these bankers that are suggesting you various investment scheme, mostly they are doing it for their monthly goals or commissions, etc. So I am always very skeptical about these investment products, and mostly I find them that they are very impractical. So and even I am finance, even when I am finance professional, I see that so many bankers keep on chasing me to market their products. So but every time I have to teach them that okay, the product that you are that the product that you are that the product that you are suggesting me is very detrimental for my financial wealth creation. So but then again, they are too concerned about their sales target rather than the well-being of their clients. So be very careful about these. So so basically it becomes very important to understand yourself about various kind of products. There's no substitute self knowledge, because market is full of people who are trying to mislead you. There are always people around you who seems friendly, but they are always trying to mislead you and sell their products to you. So you need to be very careful about. Even nothing is safe. Even mutual funds are not safe. There are some different kind of mutual fund schemes that people are designing just to get the funds, although they know it's not a very good investment idea, but they know that okay, they can market it, so they produce it. Earlier we were seeing crypto boom. Earlier we were
yeah,
seeing crypto boom, and you were telling me that a lot of your friends lost money in cryptos and all. Why that happened? And but what happened? Everybody was talking about crypto. There were various crypto exchanges coming up. There were a lot of websites which were tracking crypto prices, and everybody was talking about crypto prices. There were a lot of seminars and Telegram groups, WhatsApp groups going on about crypto,
crypto.
and everybody was keeping a track on crypto. There were so many crypto experts around, and then what happened? People
Was
lost
bubble.
90-95% of their invested money in cryptos. Why that happens? Because obviously some people were not very informed about how cryptos work, and they were the gullible investors who were misled and lost their hard-earned money. So we need
Yeah.
to be very uh, careful about any investing decision. So we go back again to mutual funds, and I'll share some other things. Okay, my screen is already
Okay.
shared, so I'll go to this. You must have seen this mutual fund sahi advertisements. You
Yeah,
remember
Sachin Tendulkar
Dhoni
and
and
MS Dhoni.
so,
Yeah.
so yeah. And so this mutual fund sahi is website by Association of Mutual Funds of India only,
Yeah.
and this another one is also AMFI India. So so now this is the site mutual fund sahi hai. The Sachin Tendulkar and MS
Hmm.
Dhoni are advertising models for this. So this actually answers a lot of your question. Introduction to mutual fund, types of mutual fund, expense ratio, risk in mutual fund, advantage, categorization. Obviously, they will not be talking about any disadvantages, but we already talked about it. some myths and facts about mutual fund, history of mutual fund, direct plan, etc. So son, read it for me, the highlighted portion.
The the Indian mutual fund industry first recorded average AUMs of 20 trillion in August 2017 and 40 trillion rupees in November 2022. It's just doubled in 5 years.
Rupees 40 trillion. 1 trillion is 1000 billion. 1 billion is 100 crores.
Yeah.
So let me use this calculator and find it out. How many crores is it? 40 into 1000 into 100. So that is about 40 lakh crores.
Okay.
So this is the aim of mutual fund industry. That is the size of mutual fund. 40 lakh crores of amount is
Invested in mutual
under the management of mutual funds presently, and that is over a period that is already always increasing. So in the obviously when you in the growing in your in coming years, when you start earning more and more, you will be investing into various mutual funds, etc., for your tax planning, for your investing purposes and all. So I believe everybody who might be looking to become a trader, or who might be in any business whatsoever, somebody who having money, some investment goals and some investing goals, must have a thorough knowledge of mutual funds. Mutual fund, if used carefully, can be a very good source for wealth creation in long run. But if you are not too aware about how they function, what are, and if you do not know the basics, I have seen people that they play mutual fund as if they are investing in a particular stock, and they almost always liquidate their mutual funds at the wrong timing. So once you understand the functioning of different mutual funds and their importance for long-term investing, then mutual fund can be a really good investment option. A very good investment, passive investment option. These ETFs and mutual funds can be used very well by a trader to increase their returns on their trading. We'll come to that in coming classes as well. But for the time being, you read about mutual funds from these two sites, the Mutual Fund Sahi and MP India website, and
Okay.
try to learn every part of it. If you have any queries, you can come back to me and we'll discuss this.
Okay. Bhaiya.
Okay, son. So
Yeah.
okay, I won't go to details of each and everything. There's enough resources available online. If you are stuck somewhere, come back to me. That we can also look into is that some mutual fund schemes can also be some mutual fund schemes can also be liquidated and invested through can be liquidated and invested through
Stock.
exchanges.
Okay.
So are you able to see my screen?
Yes, Bhaiya. NSE website.
See this NSE scheme.
Yeah.
So you can invest in mutual funds through broker only.
Okay.
List of AMC schemes, which, but this is not very popular as such. This is not very popular as far as I know. But mutual funds can be invested through your broker as well. You can get
Okay.
more details from NSE website. So here they have listed about mutual fund NMF platform. So NSE mutual fund platform that they have given, and various mutual fund schemes that are also participating. So these are various AMCs, so they can offer their scheme to public through exchange itself. So the trading in these is not similar to trading in stocks, but then these exchanges have bond market, money market, etc. So they are also offering a platform for mutual fund AMCs to offer their schemes to general public, where they can offer new scheme, get further investment into continuous scheme, and also liquidate liquidate or investor can sell their units on the exchange platform. So you can also get the greater details about it. So son, that's about it for the time being. You read all these part thoroughly, and then we'll discuss more topics in coming classes. Okay, son?
Okay. Okay.
Okay.
Yeah.
Bye bye.
Bye.
Take care.
Bye.